Hey, hey, hey. Hey, financial besties. How you doing? How you been? I love that little jam. How y'all doing? How you doing? Thank you for joining me tonight. I'm really looking forward to this topic. Um, in this video, I want to discuss the misconceptions about investing in the stock market. The lies people have told you, some things you may have heard and you're not sure if it's correct or not, some assumptions you've made, and all the information in between that may be hindering your financial progress. I want to talk about it. Y'all want to talk about it? I hope so. If you're joining me live, say hey. Hey, girl, hey, drop some money babies in the chat for me. And if you are watching the replay, comment to let me know which of these misconceptions you believed before you watched this video. Let me know which misconception you believed before you watched this video so I will know that you were here. I appreciate your besties. I appreciate all of you. And if you are new to me, hey girl, hey, my name is Malika. And as a money coach and the founder of Fabulous Financials, I help Black women learn how to invest in the stock market so you can work less, do more of what you love, and retire early without having to worry about money. So if that sounds like your vibe, subscribe to my channel, sis. That button that's right down there, right down there somewhere, and turn on that notification bell while you're down there, so you will be notified the next time I upload a new video or go live. Welcome, friend. Welcome, new friends. Let me say hello to my besties. Let me say hello to my besties. Eileen, what's up, lady? Good evening. I know I cannot see your custom emojis on the StreamYard, but when I watch it from YouTube, I can see it. What's up, lady? How you doing? How you been? Another channel member, Nina. What's up, girl? Loving the money babies. Loving the money babies. You finally catching me on live. It's because of the topic we're talking about, ain't it? And yes, I have something special for all of my channel members. I'll share that at the end of the video. I will be making an announcement shortly. Hello, Miss Angie. How you doing? How you been? And hello, we don't retire, we ascend. I know that's right. Hey, girl, hey. And look, my channel members are just coming out to hang with me tonight. I love it. Kimmy Apple, hey, girl, hey. Hey, financial besties. I am so glad you all are with me tonight. But let me make one quick announcement before we get into the topic. And while some more people are coming in to join us, because this is a need we need to have. Like, as girlfriends, your financial bestie, for real, this is a conversation we need to have. So let's give some more people a little bit of time to trickle in while I make this quick announcement. Is that okay? I hope so. But you asked, so I have been working tirelessly every day since you've asked, and I created the investing challenge that you asked me about, and I'm so excited to share it with you. The name of the investing challenge is called Your Road to 100K. And the challenge is designed for beginner investors who are new to the stock market and current investors who may have jumped into the market, but you don't really understand how to navigate the market strategically. So over 3 days in the Your Road to 100K Investing Challenge, I'm going to teach you how to build your 100K investment portfolio and manage risk so you can maintain your 100K investment portfolio. That risk part is real, real important. A lot of people start investing and don't know how to manage risk. That's the most important part, if you ask me. But the first challenge will begin on Monday, June 10th. Monday, June 10th. So 1 month from today. And we are going to meet for 3 days at 8 p.m. Eastern, 7 p.m. Central, and 5 p.m. Pacific. Each challenge day will be recorded so you can watch the replay if you have to miss a day. But I prefer that you are present all 3 days. Why is that? Because this challenge is not meant for you to just gather more information. This challenge is intended to challenge you, and you will be challenged to take action every single day. Because at the end of the challenge, I want you to walk away from me with your portfolio, with your strategy, with your risk management. And you will know exactly what to do to continue investing until you reach your 100K. Despite popular belief, knowledge is not power. How many finance books have you read? How many YouTube videos about money have you watched? Have you reached your financial goals yet? Knowledge is not power. Knowledge does not become power until you apply what you've learned. So in this challenge, I will challenge you to apply what you are learning every single day. Okay? If you want to join the Your Road to 100K Investing Challenge, the link is in the description of this video. I'm so excited. I'm so excited. The link is in the description of the video, and I'm also going to share it in the live chat really quick. Boom. There you go. So if you are interested in joining us in the challenge, click that link, go ahead and sign up, and let's get ready to build our 100K portfolio starting on June 10th at 8 p.m. Eastern. And financial besties who are channel members and financial besties who are VIP members, your private link will be shared separately. Okay? All right. Let's get into the topic. I'm excited about this topic, y'all. Let's get into it. Oh, I see some highlighted names that tell me I have some more channel members in the comments. Hey, Shalonda, what's up, girl? Get it back focused. Here is the link if you're interested in joining the Your Road to 100K Investing Challenge that will begin on June 10th. You could go to bit.ly/100K Investing Challenge. I hope you will join us. Let's see. Did I say hello to everyone? Yes. Okay. I said hello to everyone. All right. So let's get into the topic. What I want to talk about tonight is investing myths. The reasons why you're not investing, or the reasons why you're not investing consistently or strategically. I want to talk about what women need to know about investing in the stock market so that you can take your share of the reparations out the market. There are so many men that are investing. There are so many men that's making all this money. There are so many men building wealth. And women, we consistently sit on the sidelines. I want to talk about why and help you overcome some of those roadblocks by debunking some of these investing myths, debunking some of these misconceptions. And if you join the investing challenge, we are going to get you off the bench and get you in the game. But I did a poll on the community page, and I asked you all if you were investing and if you were investing consistently. I only wanted the people who answered no to respond to the poll. And some of the reasons you gave me were, And your reasons are actually what influence this topic. 35% of you said you don't invest because investing is too complicated, it's too overwhelming. 30% of you said, I'm looking down at my phone. 30% of you said you don't invest because you don't have money to invest. 20% of you said you don't invest because you fear losing money. And 15% of you said you don't invest and you chose the option other. And in the option other, I asked you to share your reasons in the comments. So I want to talk about some of these reasons here, some of these misconceptions, and some of these some of the misinformation that may be hindering your financial progress. So if you did not catch that poll and respond, let me know in the comments. If you don't invest consistently, what are some of the things you've heard about investing or that you're wondering about if it's true? If you have any fear that's holding you back, what is it that you fear about the stock market? Let me know in the comments because I want this video to tell you the truth so that those reasons are no longer hindering your process. I want you to become a confident and informed investor because we can't allow misinformation to be taking our money babies away or to hinder us from creating money babies. Okay? I don't like that, especially for my financial besties. So I'm going to help get you together. I have 4 major misconceptions that I see all the time, and I'm also going to address yours. Will we be able to ask questions during the channel? During the challenge, will you be able to ask questions? Absolutely. Yes. Yes. So in the challenge, it's going to be interactive. It's going to be interactive. I'm going to be teaching, I'm going to be coaching, and there will also be Q&A. The way I teach, if anyone that's one of my clients that's in the chat, you can attest to this. The way I teach, I love back and forth communication. I love engagement. I love interaction. I'm not a teacher that spends a whole hour teaching and you have to save all your questions to the end. I prefer just casual conversation. I'm teaching you as I'm communicating with you, like one of my girlfriends. Like we're literally just talking. I have some pre-prepared content that I cover, but I just weave it into the conversation. So yes, absolutely, you will be able to ask questions during the chat. Let's get into the major misconceptions I've heard. I'll just list them and then we can come back to them and address them individually. The one I hear all the time, this is probably the biggest misconception, is investing is nothing but glorified gambling. Investing is gambling. I was on Krishan Wright's YouTube channel. We did a live together, Blacks at Global, and we were talking about investing in our financial journey, our individual experiences. You know, 2 Black women that have achieved a major milestone goal. I was shocked to read the comments and to see people say investing is nothing but gambling. It's nothing but glorified gambling. We just spent almost 2 hours explaining to you how we did it, sharing our experience from the very, very humble beginnings all the way to the milestone that we've both achieved. And the assumption, the response to 2 hours of giving you the playbook was investing in the stock market is just gambling. I was like, I can't believe it. But it happens all the time. So I don't know why I was shocked. So I want to spend this time to debunk this first myth. I know I said I was going to mention all 4, but this one just grinds my gears. I want to spend some time, just a little bit, if it's okay with you, to debunk this first myth. Gambling is purely based on chance and luck. Gambling is purely based on chance and luck. Do people gamble in the stock market? Yes, they do all the time, especially if you don't know what you're doing. Especially if you try to invest without a strategy, especially if you invest and you don't know how to navigate the stock market. That is gambling. I tell my clients all the time, are you gambling or are you investing? When I hear them doing something and they're not confident in the decision that they've made. So there are people who gamble in the stock market. That's not investing. Investing involves analyzing data and making informed decisions. When you invest, you're not guessing. The success of your investments are not based on chance or luck. Because the difference, when you invest in the stock market, you are buying an asset. You are buying ownership into a business. The asset grows in value over time. As that business makes money, as a partial owner of that business, you make money. So your wealth grows over time. Anyone that's going to Vegas and betting on black, anyone that's going to Vegas and sitting at the blackjack table, that's gambling. What asset do they own? What value have they received when they put their money on the table? Absolutely nothing. But when you invest in the stock market, you are receiving something for the money that you've invested. You're not just putting your money into a black hole. You are literally becoming a partial owner in a major corporation. It's not some phantom thing. It's not a magical money making machine. You are investing in an actual company that's tangible, that you can touch, that you can see, that has financials you can review, that the law requires the CEO to release specific information to you every quarter because they have to disclose that to you as a partial owner. You are invested in the ownership of a company. You now own an asset that has value that will grow and build your wealth over time. You are an investor, not a gambler. Nothing that you do when you own a company is subject to chance or luck. I hope that is clear. I hope that explains the difference between gambling and investing. I do not gamble. I do not teach my clients how to gamble. In fact, I hate it when I hear them saying or doing something that even resembles gambling. We don't do raggedy portfolios. When you have an investment portfolio and you just pick a bunch of random stock, a bunch of 20 companies, a bunch of 20 different funds all over the place, you have no idea what those companies do. You have no idea how those companies make money. You have no idea what's inside the fund that you bought. That's gambling. We don't do raggedy portfolios in Fabulous Financials. My clients don't gamble. We invest. And because we invest, we build wealth. All right? Hope that helps. Let's see. Woo, y'all can tell that first one grind my gears. That first one burns me up. Burns me up. Yes. It's gambling when you don't know what you're doing. Absolutely. When you're just doing it blindly, you're gambling. And that's why the investing challenge is for beginner investors as well as current investors, because I acknowledge there are a lot of current investors that are just gambling because you don't know what you're doing. So the investing challenge is for you too. It can help you clean up that raggedy portfolio. It can help you develop an investing strategy. It can help you develop a risk management strategy. If you're investing and you don't know how to manage risk, you could also be gambling too. Because guess what? If you don't manage risk, you can and possibly will lose it all. She said, I think I'm gambling. You need to join the investing challenge then. You need to join the investing challenge. But real quick, I'll share the other. I have 4 total. I'll share the other 3. I'm not going to go into detail right now. I'll circle back to them. I'll share the other 3, and then I'll look at your your feedback as well. The second one, investing is only for rich people. I don't have any money to invest. I don't have enough money. If you say that, I'm going to get you, girl. I'm going to get you together tonight. That's a common one, too. Another misconception, investing is too time consuming. You think you have to spend a whole lot of time to invest. So if you don't have time, if you're busy, you're a mom, you work full time, you have several children, you're married, you take care of a home, you take care of your aging parents, you do all the things. So you feel like you don't have time to invest because you believe investing is too time consuming. I'm going to get you too. And the last one, the most common. This one doesn't grind my gears as much as the first one because I do understand. And this last one, we're going to go into a lot of detail about because I really, really want to help you with this one. The last misconception that I hear all the time is investing is too complicated. It's too complicated. You think you cannot understand it. You think it's too much. You think only people that are really smart can do it. Only finance people can do it. Only people who are good with numbers and good with money can do it. None of that is true. None of that is true. You can do it too. A fifth grader can invest in the stock market. It's complicated only because you haven't taken the time to try to understand it. You fear losing money only because you haven't taken the time to try to understand it. But it is not as complicated as you think. And I'm going to debunk that myth tonight as well. All right. Let me go over here to the comments. See what we talking about here. JCK, new name. Hey girl, hey, how you doing? Is it true that you have to wait 20 or 30 years for your investments to grow enough to be worth it? JCK, are you still with me? Looks like you left this comment earlier in the day. Are you here on the live stream? By the way, if you haven't noticed by now, if you ask me a question, I'm going to ask you some questions back. I need to understand what your thought process is. I need to understand the context of your question before I can give you an answer. When it comes to money, there's nothing black and white. Personal finance is personal, and investing is more of an art than a science. So there is no one answer. It depends. And I know a lot of people don't like that response. It depends, but it really does. So I usually answer a question with a question so I can get enough information to be able to give you a response that's meaningful. So, JCK, if you are here, I don't see you in the current comments. If you are here, let me know two things. First, you said for your investments to grow enough to be worth it. What do you consider worth it? Is it a specific amount? Let me know what you consider worth it. And number two, tell me, how much are you investing? How much are you investing? Because I can't tell you if the answer to this question is yes or no. I don't know if it will take 20 years or 30 years because it depends on how much you're investing. And also, number two, what's your target? What's your target? What are you trying to achieve? So it depends. When you circle back and give me that information, I can answer the question. But a general answer, will it take 20 or 30 years to, let's say the investing challenge target is 100K? Will it take 20 or 30 years to achieve that? Absolutely not. No, ma'am. No, sir. JCK, absolutely not. But I need more information from you to answer your specific question. Okay? Let me know. Let me know. Let's see. We don't retire, we ascend. My fear is that I'll lose everything. So in the poll responses, 35% of you said it was too complicated, and 20% said you fear losing money. And it's probably because you also think it's too complicated. Here's the thing. When you're investing, you have to also manage risk. Hold on first, let me back up. I want to be clear. There's a difference between investing and trading. I need to make that distinction because I know a lot of times when people are thinking about the stock market, especially when they're thinking about losing money, they're usually thinking about trading. Trading and investing are two very different things. Trading is short term. You're looking at a very short time frame. It could be a couple of minutes, a couple of hours, a day, or maybe even a couple of weeks. In the big scheme of things, that's a short time frame. When you're looking at a short time frame and you're making a decision to buy and sell within that short time frame with the intent of making money, the risk is substantially higher. Therefore, your precision and the accuracy of the decision that you make has to be significantly better. So, because of that risk and looking at the stock market within a short time frame, if your decision is wrong, if the data you analyze is wrong, you could lose everything. In fact, statistics show that 98% of traders lose everything within the first 2 years. Have you heard of the phrase called blowing up an account? That means that trader lost everything. So, if that is a concern you have as it relates to trading, that's a very accurate concern. But even with trading, you can still manage risk. The risk management is just different. So, to answer your question in terms of investing, investing is buying ownership in a company or a fund, which is a basket of companies. You're investing in the ownership of that company and you're buying and holding the ownership long term. You're buying and holding the ownership long term. And long term is at least 5 years. At least 5 years. And because you're buying long term, that in and of itself significantly reduces your risk. You're not making a decision where you have to be precise and accurate in a short period of time. The company has time to make money, right? So that substantially reduces your risk. Number two, if you don't understand how to analyze a company, just don't invest in individual companies. Just don't invest in individual stock. That's another way you can avoid losing everything because you're not putting everything all in one company, hoping that company is going to do well. Right? So there are ways you can manage risk when you're investing so that you don't lose everything. Okay? And you can also learn how to analyze a company so that you can graduate to that level of investing. There's levels to this investing game, right? There's levels to this. So you can learn how to manage the risk to make sure you don't lose everything. But investing because you own the company or you own the basket of companies that are in the fund and you're owning it long term, the odds of you losing everything drops significantly. Now, I won't say there is no risk because all investing has risk. With investing, risk is inherent. You have to learn how to manage the risk. right? And that's what I teach my clients how to do. In addition to teaching them how to invest, I teach them how to manage the risk. Okay. So, as a summary, if you're talking about trading, you can lose everything. I don't teach beginners how to trade. I do teach trading, but that's after you've been through and elevated through all of my coaching programs. Trading is the last thing I do. I have to make sure you have a strong fundamental foundation in the stock market. You know how to analyze a company. You know how to do fundamental analysis. You know how to do technical analysis. You've paper traded before you start putting real money in the market to learn how to trade. I don't teach beginners how to trade because it's so risky. I don't want to be responsible for you losing money. So I don't do it. I don't do it. I only teach beginners how to invest in the stock market. And one of the reasons why my coaching program is structured that way is because I am a trader. So I'm not against trading. But what makes me a profitable trader is because I've mastered the companies that I invest in first. And I trade those companies that I already invest in. So that gives me an edge. That gives me leverage over others who are just guessing and hoping and wishing and looking at technicals on the charts. I understand the fundamentals of the company and what makes them move because I've invested in them first. So I teach investing first before I will teach anyone how to trade. And without that foundation, your risk is higher of losing money. So you have to have that strong foundation first. So I made some assumptions about your questions, but I want to make sure I explain the distinction between trading and investing and why you could potentially lose everything if you're trading. But I don't teach trading. I teach investing. It's such a good question. Thank you for asking that. Such a good question. If you have any questions, can you put a Q in front of your comments? Because I'm scrolling, but y'all, my eyes bad, and I never wear my glasses when I'm on live because of the glare. Even though I have anti-glare lenses, there's still a glare. Let's see. Angie Mo, as a retired senior already, I can't afford to lose a dime, but yet I need to make investment income. Same thing. Same thing. Are you thinking of the stock market as trading? I need to make investment income. What do you mean by that? I don't want to make any more assumptions about your comments. What do you mean by that? Are you thinking of trading? Or are you thinking of investing and building wealth? As I always say, trading creates income, investing builds wealth. Trading creates income, short term, investing builds wealth. You can be a profitable trader. It's just that the decisions you make have to be more accurate and more precise because you're making decisions based on short time frames. All right. Let's see. Investing is a strategy. Yes. But dang, learning those strategies, right? Guessing is not a strategy. Hope is not a strategy. And that's what a lot of people do when they enter the stock market. They invest or they gamble, I should say, based on those two strategies. And neither one of them are real strategies. Yes, yes. Definitely need this education. I'm all over the place with invest. Think I'm going to join the channel. Join us. Join us, Miss Angie. Sorry I'm late. Money making mamas. Hey, girl. Hey. ADHD cutie single mom on duty. Hey, girl. Hey. Let's see. Let's see what my sis, Miss Eileen, talking about. I've heard you have to invest $1,000 plus in order for you to get any decent returns on those investments. That is a great comment, and it's similar to the comment from JCK. JCK, I hope you're in here. You left the comment at 2. This timestamp says 2 2:29. So you were in here early, sis. I hope you come back and give me some more information. But yes, this comment is very similar to JCK. It depends on what you are trying to target. What's your goal? What's your goal? I can tell you this. When I first started investing, I was not investing 1,000 plus. Absolutely not. I was not investing 1,000 plus. What's your goal? What are you trying to target? And how long are you willing to invest? That will determine how much you need to invest. There is no perfect formula where you just plug in a number and say, this is what you need to do all the time. It really depends on what your goals are. So in my Invest with Ease coaching program, I actually help my clients get clear on what their goals are. And we build what I call an investing action plan that's tailored around their goals, because everybody has different goals. Everybody has a different amount to invest. Everyone has a different time horizon. It's all different. So I cannot say this is true because it depends on what you're targeting and how long you're investing. I did not start with $1,000. In fact, that reminds me, I have a video coming out. When is it? When am I releasing that video? I think it is scheduled for next week on how to build wealth with just $300. How about those apples? So no, ma'am, this is a myth. It is not true. How much you need to invest depends on your target and your time horizon. All right. Go ahead and ask. Go ahead and ask. Feel free. I'm here for you. I'm here for you. Okay. All right. Let me get back to the fourth myth that I kind of touched on a little bit. The myth that investing is too complicated, right? The myth that investing is too complicated. A lot of people think investing is too complicated because they're thinking about trading. When you're thinking about trading, that is true, that it can be complicated, and it takes time and dedication to learn how to be a consistently profitable trader. But with investing, I won't say it's simple, because it's not. I'm not even going to insult your intelligence by saying that. It's not simple or easy, but it's not so complex that you can't learn it. I will go so far as saying that it's simple enough where I can teach my grandson how to invest. In fact, I should do a video one day with him. I'm going to have him with me later this month. I should do a video so y'all can see how much he knows about investing. It's so not complex. I am going to teach beginners how to invest in just 3 days. Investing is not complex. You just have to take the time to learn, and it doesn't take a lot of time. There are so many platforms where you can learn how to invest. Of course, you got the YouTube University. It's just a matter of taking the time to educate yourself, taking the time to enroll in a 3-day investing challenge. You spend 3 days binge watching Netflix. Spend 3 days learning how to invest. Another thing that I could say to help you understand that investing is not complicated, you don't have to do the complicated. There's levels to investing, and there are ways of investing that is complicated. I'll admit that. But you don't have to do those complicated things. You don't have to invest in individual stock that will require you to analyze a company's financials. You don't have to invest in individual stock that will require you to do any type of research so you are making changes in your portfolio every month or every quarter. You can invest in a very, very simple way. And the most simple way of investing that's not complex at all is by investing in index funds, right? By investing in index funds. If you look at the link in the description of this video, there's a book that I mention all the time. I talk about that finance book like it's the Bible. It's like a finance Bible. It's called The Simple Path to Wealth. I think a lot of people think investing is complicated because they're thinking about trading, or they think they have to do the more complicated things. You don't. You don't. Spend 3 days learning with me in the investing challenge, or spend 3 days reading a book, The Simple Path to Wealth. That alone will debunk the myth that investing is complicated. I'm going to show you how simple it is. Right? The other point I want to make about investing being complicated is people think that they have to time the market. They think, oh, when is a good time to invest? Should I get in the market now? Or they'll see an article that says something about the stock market is crashing, and then they feel like, oh, I need to get out now. You're trying to predict what the market is doing. You're trying to predict short-term movements, and you're trying to make decisions based on a short time frame. That does make the market seem like it's complicated. You don't have to do any of that either. You don't have to focus on trying to time anything. If you just focus on investing consistently and investing long term, the trend will smooth itself out over the long term. So there's a saying, it's better. How does it go? Y'all help me out about the time in the market thing. I'm sure my investors have heard this saying before. It's better to spend time in the market instead of trying to time the market, right? You don't have to buy and sell. You don't have to get in at the perfect time. You don't have to get out at the perfect time. If you're trying to do all that, you're trying to trade. That's not investing. And that will make it more complicated than it needs to be. So just don't do that. You can opt out of that. You did know that, right? Well, if you didn't, I want you to know now. You can opt out of all of that. You do not have to constantly buy and sell to be successful. If that's what you want to learn how to do, by all means, do your thing. But that's not what I teach. So the investing challenge is not for that. It's not for trading. You do not have to constantly buy and sell and constantly trying to time the market, constantly trying to figure out the perfect time to get in, the perfect time to get out. You don't have to do any of that. Investing does not have to be that complicated. That, in my opinion, especially for a beginner, is stressful. Why are you going to stress yourself out like that? Not to mention the fees that you have to pay. Did you know when you're trading, you got to pay fees for every transaction? Also, not to mention the taxes that you'll have to pay. You know, when you take profit on a trade, that's considered ordinary income, and it's taxed at the same tax rate of your salary. But as an investor, as a long-term investor, I mentioned this in another video. If you invest and you hold ownership of an asset for a year and a day, the IRS views that as long-term capital gains. Long-term capital gains has its own separate tax rates. I can withdraw up to $47,000 out of my investment account that are long-term capital gains and pay zero taxes. People wonder how the wealthy pay so little in taxes. is because they're using a different pot of money than you are. So when you're focusing on the short term, when all of your money is coming from earning money from a job, you're going to pay more in taxes. But when you invest long term, all you need is a year and a day for it to be considered long-term capital gains. The tax rate on long-term capital gains is significantly lower. So there are so many benefits to investing and focusing on building wealth. I understand that there's an interest in making money fast through trading. I get it. But when you're trying to do something fast, you also substantially increase your risk. But what I want you to take away from this conversation tonight is, as an investor, you don't have to do any of that. You don't have to do any of that. You can eliminate all the complexities of buying and selling. You can eliminate all the complexities of trying to time the market. All the things that make you feel investing in the stock market is too complicated. What you're thinking about is more trading. That's not investing. Do you offer a service to look at portfolio and advice? No, ma'am. I do not. As a coach and a financial educator, I teach you how to understand the fundamentals of the stock market, and I teach you how to make those informed decisions. But I am not a financial advisor, so I am not qualified. I am not licensed to review a portfolio or advise you on what to invest in. I do not do that. I can get into a lot of trouble if I tried to do that without a license to do so. So no, absolutely not. I can't do that. Until a few years ago, Dominique, hey girl, hey. Until a few years ago, I associated getting into the stock market only as short-term trading. See? I think that's the default mindset. A lot of people, when they think about the stock market, they by default think about trading. In fact, I was on another person's channel. I think she's in here. I was on another person's channel last week, and I mentioned to her that I was a stock market investor and I teach Black women how to invest in the stock market. And in response, she was like, "Oh, I need to look into your information. I'm going to subscribe to your channel. I want to learn how to trade." I never used the word trade, but because I said stock market, by default, she automatically thought I meant trading. And that's why I think people believe that the stock market is risky, it's gambling, you can lose all of your money, it's complicated. I think all of these myths are related to this exact thought. Investing is not trading. They all are done in the stock market. But you have two different types of people that are in the market. You have your traders that are short term, and you have your investors that are long term. And there are also plenty of people like me that do both. But I built my foundation on the investing side first. And because of what I've learned through investing, that is what gives me an edge to be a consistently profitable trader. So if you try to skip the foundation and jump straight to the most complex parts of the stock market, you're increasing your risk and you could potentially lose it all. All of your fears, all of your concerns, they could all become reality. Again, I'm not against trading. I think it's a life skill that everyone should have. But I also think it's a level above the foundation that you should have first. That's all I'm saying. Yeah, Simple Path to Wealth is a great read. Yes, it's one of my favorite investing books. I put together a list of all of my favorite finance books in an Amazon storefront, and I included that link in the description of this video as well. And it shows up as number one. When you click the link and open it up, this book is the first thing that shows up. Yeah, I love it. I love this book. He has a companion book that just recently came out, like in the past couple of years or so. I have not read the companion all the way through. I do have it, and I started reading it. My mind just wasn't focused on it, and I haven't finished it. But it also has good reviews too. But yeah, this is one of my favorite books. Yeah. Let's see. Jane P. Hey, girl. Hey. Investing is awesome when you understand it. I see my money growth now to decide when and what to do with all the money. Live, honey. Live. Enjoy your life. Read the book, Die with Zero. Read that book. Enjoy your life. Spend it. Spend it. Enjoy the fruits of your labor. Yeah, I'm gonna finish reading that book. You get just so is that the companion you're talking about? I'm gonna finish reading it too. I would challenge myself to finish it this month, but with all my travels going on, I know I won't. Maybe this summer. I'll finish reading it by this summer. Sarah, new name here. Welcome. I believe if you are under 1,000, invest on your skills, courses, books, and tools so that you can increase your earnings. The best investment for real. I actually agree with this. Mhm. I actually agree with this. Yeah, because you need money to invest, right? You need money to invest. Perfect segue into the next misconception because you don't need a lot of money to invest. So, the next misconception that I hear often is investing is only for rich people. You need a whole lot of money to invest. Or as it relates to one of the comments I highlighted, I hope she comes back and answer my questions. Um, you have to invest a certain amount for it to be worth it, or you have to invest 20, 30 years for it to be worth it. It's like there's these assumptions that a substantial amount of all of these things are needed to invest. That's not true. It's not true. Investing today is much different than it was 20 plus years ago. Now, if someone that was a seasoned person said that, I could understand where they're coming from. But because of competition, these brokerage firms have created so many new things that are available for us today. Like back in the day, you had to meet a minimum in order to gain access to a mutual fund. For example, there were no such things as ETFs. ETFs were created in, I want to say, the 80s. There were no such things as ETFs. So if you didn't meet the minimum, you couldn't invest in the mutual fund, right? And then also, when you would invest, there was a fee for every transaction. So I can see how someone back then would think investing was for rich people only, or you needed a lot of money because there was so much friction and so many roadblocks in order to gain access to the market. Times are different now. Times are different now. The brokerage firms have eliminated the transaction fees for investing, not trading. I'm not talking about trading. They have eliminated the transaction fees, right? And then when this wonderful thing called exchange traded funds were created, they provide the same benefits as a mutual fund, but they are bought and sold in the stock market like an individual stock. Brokerage firms now allow you to buy fractional shares. So there's no minimum you have to meet anymore, and there's no fixed amount of money that you have to have. So let's say you wanted to buy an ETF that costs $300. Let's say it costs $1,000. And I'll use $1,000 because one of the questions was about you need to be investing at least $1,000. Let's say the mutual fund costs $1,000 and you only have 100. You can still invest in that mutual fund because your brokerage will allow you to buy a fraction of the share. So instead of owning one whole share, if you only have $100, it will give you that percentage of ownership. And the more you invest, once your account, if you continue investing in that same asset, Once your account gets up to $1,000, you will see the ownership percentage grow. So you may start with just 0.1%. You're still an owner. You're just a small owner, and that's okay. You in the game, sis. And then you put another $100 in there, and another 100, and another 100. And then when you get up to that 1,000, you'll see your ownership is one whole share. Wealth is built by investing consistently and increasing your ownership. This is not gambling, so it's not a guessing game. It's not trading, so you're not buying and selling. When you're investing, you're focused on ownership. How do people build wealth? It's because they build assets that have value that they own. Owning things, owning assets, not stuff, not cars, not bags, not shoes. Owning assets is what builds your wealth. Owning assets is how you invest in the stock market. It's not the buying and selling, that's trading. Increasing your ownership by starting with any amount that you have. In fact, in the investing challenge, I am recommending that you bring at least $20 to the investing challenge, because one of the daily action items, you are going to walk away from me with ownership in the stock market. And you can do it with just $20. You don't need a lot of money to invest. The stock market is not only for rich people anymore. And I add that because at one point it was, but times are different now. There are so many investing options that are available. It's so many things that you can buy now. And because fractional shares exist, because ETFs exist, and because fees have gone away, it has opened the door to regular people like you and I. When I first started investing, I did not start with $1,000. I ain't have $1,000, but I started. So if you only have $20, that's going to be the minimum requirement for the challenge. If you have $100, if you have $500, start wherever you are and just build from there and focus on building your ownership. When you own things of value, that's how you build your wealth. And I'm going to give y'all some game. I'm going to give y'all just a little bit of sauce. The more assets you own, the more things of value that you own, you can leverage your asset to create money for you at any time. You can leverage your assets to create money for you at any time. As long as you own assets, you will never go broke. Your assets have value. You don't even have to sell your assets to access money. You can leverage your assets to access money. So focus on building ownership, and you build ownership one share at a time. And if you don't have enough for one share, buy a fractional share. And just keep buying it over and over until you get the one share. And then when you get the one share, focus on 2 shares. When you get 2, focus on 5. When you get 5, focus on 10. Right? Focus on building your ownership. You want to own things of value. You don't want to own stuff that have no value or things that have depreciating value. You want to own things of value. Build up your assets. That's how you build up your wealth. And you don't need a lot of money to start in the stock market. That's another reason why I like the stock market. When I bought my rental properties, I needed money. I needed money for Ernest. When I built a new construction property, I needed money for a deposit. When I built an existing property, you need money. When you invest in, I don't know, a car business, you need money to buy the car, a deposit, a down payment or something. In the stock market, you can do it with $20. You got $20? Let me know in the comments. You got $20? You got $20? Dominique said her first self-directed investment was for $250. And Malika recommended for wait, I see you fixed that. Thank you. Was for $250 in an index fund. Okay, in an index fund. And if that index fund was an ETF, you didn't need the whole $250. Right? You didn't need the whole $250. You can buy a fractional share of that index fund. We don't retire. We insist that I got 20 on it. I got 5 on it. We gonna do 5, 4 times. Look, I said 5. I ain't good at math, y'all. I can invest in the stock market and make money babies, but I don't know math. This should tell you how simple investing is. I can't even do mental math. Sis said she got 20 on it. Yes. Y'all got $20? Do y'all have $20 to invest in the stock market? For all of you that say you don't invest because you don't have any money, do you have $20? How much did you spend on Uber Eats last month? How much did you spend on DoorDash last month? Eileen said just a little more than 20 after paying my mortgage. Yes. You got $20? Let me know if you had $20. Because if you had $20, you can invest. Investing is not only for rich people. Of course, the more you have to invest, the better. But the door is not closed to you if you don't have a lot. Right? Angie said she got 20 times 5. All right, whatever you have. 20 is just the baseline, right? Whatever you have, bring it to the challenge. 20 is just the baseline. But you can get started with just $20. And yes, do you consider bonds? Absolutely. That's investing. Yes, that is a question I will answer. And I go into more detail in my Invest with Ease coaching program. And I will also go into detail with it in the investing challenge when we talk about managing risk. Yes, I consider bonds. Bonds is something that should be considered as you age. As you get older, you want to assume less risk, right? So bonds is something that should be part of your risk management strategy as you're building out your investment portfolio the older you get. We talk about bonds we are going to talk about bonds in the challenge. So absolutely, that is something that you should consider if you are a seasoned bestie. Jane. The name of the book, The Simple Path to Wealth by J.L. Collins. Yes. I already do a little investing. I'm just often concerned if I'm doing it right. Understand. The investing challenge is for current investors as well that just don't know what they're doing. We get you all the way together. Come on and join us in the challenge. Eileen said she started with Schwab slices for her grandson. And then after finding my channel and Adelia's, I started looking into investing for myself. Okay. Yeah. I think that's a good place to start. A lot of these brokerage firms, they simplify it. They make it so ridiculously simple, which is great for someone that's just starting. You put a pot of money in there and they slice it up for you. I think M1 Finance is another brokerage that does that has the slices. I don't do that. I'm not a fan of it. I like having control of my money and where it's going. But yeah, I think that's a good way to start. But I'm glad that you have taken control and have decided to learn how to do it for yourself. A lot of the brokerage companies that offer services like that, they ain't free. They're not free. In fact, a lot of people are leaving M1 Finance because they are starting to charge a monthly maintenance fee if you don't meet the minimum balance requirements. So they're not free. These brokerage firms are not going to provide a service for you at no cost. Even if the cost is not up front, it's embedded somewhere. So learn how to do it for yourself and have more money to invest. Let's see, Kimmy. I have one more misconception I want to talk about after this comment. Since that payoff is my 2024 goal, yay! I've only been buying fractional shares in the total stock market ETF to practice investing. Okay. Hey, you doing it. You're doing it. You're not sitting on the bench. You're not sitting on the sidelines. I just want you to get off the bench. Even if you're doing something that you think is just a little bit or just getting your feet wet, that's better than nothing. But once you do that little bit, you can't stop there. I want you to continue learning so that you can elevate through the levels. Right? Okay. Let's get to the last one. Investing is too time consuming. This is a common misconception about investing. I think it's also one that people assume because they're thinking about trading. You know, when you're trading can be time consuming as you're learning in the beginning because you have to study the market. You have to understand price action. You have to learn how to read the charts. You have to do analysis, your fundamental and your technical analysis. So trading can be time consuming. And then you have to set up your charts, and then you have to wait, for your setup to come to you. You have to know when to get in, when to get out. And because you're doing all those things, some traders, they sit at their computer for hours every single day trying to trade. Girl, I ain't got time for all that. I ain't got time for all that. Y'all, the most committed I am to sitting at the computer is getting on this live stream on Fridays. And at most, I'm on for an hour and a half. That's all I got. There is no way I will sit in front of a computer to try to make money out of the stock market for hours on end. I ain't doing it. So I think when most people say this, they're thinking about the time that it takes to trade. But even with trading, as you become an advanced trader and you learn different strategies, there are ways to reduce the time that it takes. But when you're learning, it is very time consuming. It is very time consuming. But again, that's trading. Another idea that comes to mind when I heard this misconception, I actually have a client that is very successful in her career. She wanted to learn how to invest. She had money that she wanted to build wealth with. She wanted to be able to retire early, but because she thought investing was time consuming, she trusted putting her money with financial advisors and financial planners and just trusted that they were doing the right thing with her money because she didn't have time. She thought she didn't have time. And those financial advisors, once I pulled back the layers of her portfolio, I say this with a caveat, I was not reviewing her portfolio to give her financial advice. When I pulled back the layers of her portfolio and I saw the fees that she was paying, I saw the funds and the stocks that they had her in, and I would simply just ask her questions. What is this? She had no idea what she was invested in. There was no communication. There was no advisory sessions. There was none of that. She just trusted them blindly. And her portfolio is what I would call a raggedy portfolio. And the reason why she had come to me, because she had been using this advisor for so long and she was getting frustrated because her portfolio wasn't growing. And she had been funneling hundreds of hundreds of dollars to this advisor every month for such a long time. And she thought they were doing what was in her best interest. And she trusted them because she wanted to invest, but she thought it was too time consuming to do it herself. And she didn't have time. She worked a 9 to 5. She was a mom. She has real estate properties. She did all the things. But she trusted someone else with her money because she thought she didn't have time. Now, this particular client is not in the group coaching programs. We work together one-on-one. And the things that she's learning and the light bulb moments that she's been having since we've been working together, it just tickles me because she's realizing it's not time consuming at all. She was like, I could do this. Yes, you can. I want you to know that you can do it too. It's not time consuming. It's not as complicated as she thought it was. And again, I think people believe it's time consuming because they're thinking about trading. When you're investing, the most time you would spend is up front when you're deciding what to invest in. Is up front when you're educating yourself to learn how to invest. It's up front when you're developing your investing strategy and putting together what I would call an investing action plan. If you're investing, you should have a strategy and you should have an action plan. If you don't have those two things, what you doing? What you doing? You might be investing in the market, but are you investing to maximize your returns? Are you investing as optimally as possible? Are you thinking about targets and your long-term goals? So the most time that you would spend is the upfront time, making those decisions, putting your portfolio together. But once your portfolio is structured, you can set up the funding of it automatically. You don't even have to think about that either. You can do dollar cost average. You can do direct deposit from your payroll directly into your brokerage, or you can do an automatic transfer from your checking account directly to your brokerage. You can automate everything and set it and let it bake. And I paused because my mind was thinking set it and forget it. I hate that phrase. I will never tell you to set it and forget it. You should always know what your money is doing. But once your portfolio is built out, all you have to do is fund the account, set it, and let it bake. That's it. That's it. My long-term investing account, what I call my legacy account, because it's now in a trust fund for my grandson, I don't do anything to that account. I spend zero time managing that account. I set it and I let it bake. I look at it once per quarter. That's it. Investing is not time consuming at all. You're buying ownership in a company. You're buying ownership long term so that company can make money for you. Right? Let it bake. Let that CEO be your employee and do his job, or her. Him or her can do their job. Let it bake. So investing is not time consuming at all. Let me see what thoughts y'all have about that last misconception. I have over, ooh, child, this gave me heartburn. Any financial bestie that's been around for a long time, y'all know why. Any client that has been through any of my programs, y'all know why. Put it in the comments. Why this comment give me heartburn? I have over 2,000 invested with Robinhood as I learn how to invest my spare change. First thing I would tell you, girl, get your money out of Robinhood. Get it out. Get your money out of Robinhood. But I'm glad. You're learning. I'm glad you're learning. Get your money out of Robinhood. Dominique said, trading sounds like way too much work. It is a lot of work. It is. When I first learned how to trade, I ain't gonna tell you no lie. I probably spent, and this is over the course of a long period of time, probably over 1,000 hours, over 1,000 hours studying and learning the market and learning how to read charts, learning how to do analysis. Trading can be profitable, but it is a lot of work. It is. Yeah, it sure is. I do not trade often. When I trade, I only trade on Monday and Wednesdays. When I trade on Monday and Wednesdays, I only trade between the hours of 8 and 11. By 11 a.m., I'm done. But that is a result of many years of practice and refining my skills, refining my strategy. So I don't spend a lot of time doing it now. But when I was learning, girl, and did I lose a lot of money while I was learning? Girl, yes, yes. Sabine said I got $20 and I spent so much more than that on doing that. Yeah, come to the investing challenge. Bring your $20. Bring your $20. Let's see. All right. Thanks again. You're welcome. You're welcome. Our dividend. Ooh, this is a good question. I'm glad you're asking investing questions now. This is good. Are dividend stocks, ETF, mutual funds necessary to build wealth? They aren't necessary. You can build wealth using any asset class. It's a matter of what you prefer, what your goals are, and how you want to structure your portfolio. There is no one right way to invest and build wealth. Even when you are a stock person, let's say you want to invest in individual stock. I have a client. In fact, I have two clients that I'm thinking about. Two clients. They're very concerned about social. Um, how do I want to describe this? Things that have social impact in the world. And they do not want to invest in stocks or funds that are not aligned with their values. I show them how to invest in a way that's aligned with their values. They don't have to compromise who they are to invest. So, whatever your preferences are, you can structure your portfolio to buy those things. So, to answer your question, are these necessary? No, nothing is necessary. It depends on what you want. Do you want to be a dividend investor? You buy dividend stocks. Do you want to be a passive investor and only invest in funds? You buy ETFs and you buy mutual funds. Do you want to be a growth investor? Then you buy individual stocks and companies that are growing. Do you want to be there's so many different investor identities and different investing strategies. It all depends on what you want, and whatever you want is possible. If you don't want to invest in Tesla, for example, because you don't like Elon Musk, you don't have to invest in Tesla to build wealth. There's thousands and thousands of other companies to invest in, right? If you think investing in individual stock is too risky and you only want to invest in funds, you can build wealth only investing in funds. My legacy portfolio that I was telling you about, that's the portfolio I started with. That portfolio only has funds in it. It's only funds in it. I also have a growth portfolio. And then I also have a separate trading account. Right? So it all depends on what you want. But is anything necessary to build wealth? Absolutely not. You can build wealth with any asset class you want. Okay? Angie, I'm willing to put in time to learn how to build wealth in the next 5 years. I got you, sis. I got you. I love to hear that. Jane P said, I'm with Merrill Lynch and know exactly the page in my portfolio statement that documents the advisory fee and the debit amount each month. Just added a trust fund for my niece's education. Awesome. Awesome, Jane. Let's see. Ooh. Y'all trying to give me y'all trying to give me heartburn tonight. Just reading the first part of this comment, I'm like, oh, my eyes started twitching a little bit. But I'm so glad you quickly went to Fidelity. I'm so glad. I had to get to the end to release my breath. I love it. I love to see y'all growing. Started with Acorns, graduated to Vanguard. I love it. I love to see y'all growing. I think those cutesy apps serve a purpose. And if that's what helps you to get your foot in the market, so be it. But you learned and you graduated to a more reputable brokerage. I love that. So more than one portfolio. I never consider that. For a beginner, absolutely not. For a beginner, absolutely not. Each of my portfolios graduated with my experience. Okay. My first portfolio that I call my legacy portfolio, that's how I started investing. That's when I started learning how to invest. I mostly did passive investing and I only invested in mutual funds and ETFs, right? I invested in that portfolio for years. For years as I continued learning. That portfolio is where I built my first $1 million portfolio, just investing in funds. I did not graduate to growth stocks until I had the knowledge and the skills to take on more risk. And I separated my money because I believe that you keep your stay rich money and your get rich money separate. I take a lot more risk in my portfolio that I have growth stocks in. My rate of return in my growth stock portfolio is probably about between 30 and 40%. The stock market on average gives you 10%. My legacy portfolio with funds in it gets about 12%. My growth portfolio gets between 30 and 40%. That is a result of skill that I developed over time to learn how to do that. My third portfolio happened after, many, many years after I mastered the growth portfolio. That's when I was ready to start trading. I separated that money again for the same reason. I take ridiculous amounts of risk in the portfolio that I used to trade, but it's only a small portion of my portfolio. In the big scheme of things, my total portfolio, the amount of capital that I have in my trading portfolio is probably less than 10%. I do not risk a lot when I'm trading. I do not risk a lot when I'm trading. And even when I enter a trade, the amount of capital that I put in one position is a small percentage of the small percentage that's in that portfolio. All of that is part of managing risk, managing your position size, managing the capital. All of that is part of learning how to trade. And that's how I'm able to grow that account. But I keep the accounts separately because they serve different purposes and I take a different level of risk in each account. And I learned how to trade and I learned how to build my trading account because I first had the growth account where I had to learn about the companies. I had to learn how to do the analysis, the fundamental and the technical analysis in order to grow that portfolio. Those same skills transferred to help me be a better trader, right? So my portfolio grew with me as my skills grew. But what you see at the end is the more complex stuff. And all I'm saying tonight, as I'm debunking these myths, is investing in the stock market does not mean you go from 0 to 10. You don't go from entering the market not knowing anything straight to the most complex portfolio. That is how you're going to lose everything. I'm not saying you have to do it the way I did it and follow the sequence that I followed and take as long as it took me to learn. I'm not suggesting that at all, but at least build a solid foundation first before you choose to take on more risk, right? And what I'm going to do in the investing challenge is to help you build that foundation. I will not talk about trading in the investing challenge. I'm going to help you build the foundation. What you do with that after the 3 days, totally up to you. But I want to help you build the foundation so you have something to stand on when you decide to take more risk. Okay? Hope that explains why I have more than one portfolio. Let's see. Where in your investing timeline did you start investing in real estate? I bought my first property about 25 years ago. And at that time, I was still only investing in my legacy portfolio, right? I was still only investing in my legacy portfolio. I just wanted to diversify my asset classes so that everything wasn't depending on the stock market. So I bought the first property after I had already built up some of the legacy portfolio. When I bought the second property, it was many, many years later. I made some really bad investing decisions with real estate because I didn't take the time to learn. I didn't have a trusted mentor, trusted coach to help me. I learned by fire. The things I know about real estate is because of the mistakes that I've made. But when I bought the second property, it was many, many years later, and I actually was able to leverage my investment portfolio to buy the second property. And I kind of leverage all of my assets and parlay it into other ownership. That's one of the reasons why building your foundation is so important. You can leverage one asset to buy the next asset. Then you can leverage those assets to buy the next asset without spending your own money. Build your foundation first. In whatever asset class you like. I do a little bit of real estate. I don't know enough about it to teach anybody anything, but I'll answer what I can if you ask me anything about real estate. I do a little bit of real estate, but the stock market is what I do at heart, is what I love because I can do it with ease. It doesn't require a lot of work, it doesn't require a lot of money. And now the things that I do, I can travel the world and do it from anywhere. If I decide not to trade, I just close my laptop and I don't trade, right? It's easier than any other asset class, in my opinion. But there are different ways to invest. And I do a little bit of real estate investing. I only own a couple of doors. Let's see, when the time comes, my next investment class will be real estate. Awesome. I follow an awesome sister. Hold on, she's a Black woman. She coaches on real estate. Hold on, I'm going to find her name. I'll find it later and I will put it in the description box. But she's an amazing real estate coach. All of her posts are very educational, very informative. And I learned so much just following her. But I'll share it in the description box later. Okay. Let's see. Yeah, so bonds are less risky. Are the rate of return good on average? Come to the investing challenge and I will help you understand all of that. How long should I wait before withdrawing from my retirement account? Well, with retirement accounts, by IRS rules, You can't withdraw from them until age 59 and a half. So after age 59 and a half, you can withdraw whenever you want. I would say, will you need the money? If you don't need the money, let it keep baking and making more money babies for you. But after 59 and a half, if you need it, take it. Well, I looked through all the comments. I think I answered all of your questions. A clarity session. Hey. Okay. So my clarity session is after our discovery call. So schedule a discovery call first. This is for those who want one-on-one time with me. Schedule a discovery call first because I spend the time in the discovery call to understand what your goals, your challenges, your needs are. I need to learn a little more about you before I can devise a plan to help you. Okay. After the discovery call, then we transition into the clarity session. That's when I come packing a punch. That's when I come bringing the solutions, bringing the sauce. But I need the discovery call first so that I can understand more about your finances. The discovery call is only about 30 to 45 minutes. The clarity session is 2 hours. We spend 2 hours together unpacking everything. I tear it all down and help you build it back up. But yes, that's a private one-on-one coaching session that I do, but we need to do the discovery first. The link to the discovery is Money Coach Malika /schedule. That's the link to my discovery call. I'll drop this in the comments for you. All right. Let's see. I think I covered all the myths. I think I answered all of your questions about what you was thinking about the stock market, the fears that you have. Let me know in the comments, was this helpful? Was this helpful for you? Do you still have the same fears? Do you still believe the same myths and the misconceptions? Has this changed anything for you? Has this conversation tonight changed anything for you? Let me know. And as a reminder, if you want to learn how to invest safely and manage risk without the fear of losing all of your money, without concern that the stock market is too complicated, that it takes too much time, all the misconceptions we talked about tonight. If you want to learn how simple investing can be, I invite you to join the Investing Challenge that will begin on June 10th. I will help you learn how to invest and structure a portfolio to get you on the road to 100K. This challenge is for beginner investors and current investors who don't really understand what they're doing. This is for you too. I hope you guys will join me. It's only 3 days. Commit 3 days to your learning of a life skill that can change the trajectory of your life. Y'all know I was on welfare for almost 10 years. I showed y'all my Social Security statements where almost 10 years I ain't earned nothing. I earned nothing. Learning how to invest in the stock market is literally what changed my life. And I'm just here to help those who want to learn. Okay? So if this video was helpful to you, please hit that like button and share it with the woman you know who wants to invest, but she believes some of the misconceptions that you probably also believe before you watch this. Let's help her out too. I'm going to link in the end screen some more of my videos about investing. It'll show up over here somewhere. Until next time, continue learning. Please continue learning. Don't just stop at the basics. Continue learning because investing is about growing your assets, growing your ownership. If you take care of your money now, if you use your money to grow your ownership, to grow your assets, later on, your money will take care of you. Because as long as you own assets, I truly, truly believe you will never be broke. So until next time, I love y'all. Bye for now.